Welcome, everybody, to the Chinchilla Pickin' Podcast. It is January 7th, 2024. As always, we hope to be entertaining, educational, and uplifting because we want everyone to make money. My name is David Underwood, and I'm joined by the one and only, the Baron of Bonds, Brandon Beaver. Brandon, how are you?
Doing good. How about you?
I am doing well, man. I'm doing well. I'm just really enjoying my day today.
That's good because I cannot stand winter. I can't stand it even more when it's the way that it is right now. I don't like snow. I don't like snow at all. But
Boom.
there's no snow right now. But what's even worse is that it's cold mud. It's just cold mud.
So I enjoy winter. I enjoy ski resorts. I enjoy getting away to ski resorts, and I've snowboarded for over 20 years. So I have plenty of experience snowboarding and enjoy it. Now I think I'm older. I think I'll ski more than snowboard. Too many possible knee injuries with snowboarding. Skiing might be safer road for me. But yeah, I enjoy the winter for those aspects. I think it's beautiful right after a fresh snowfall. A week later, after the snow's all brown on the roads, that's when it looks ugly. But um, beautiful right from a fresh snowfall, man.
I went to Perfect North about 10 years ago and I spent the entire 2.5 hours on the beginner's hill learning the pizza thing.
That is not a ski resort. So I will take you to a real ski resort if you're willing.
I put, you know what, wait for my health insurance to kick in.
Probably best if you've never really skied or snowboarded before. Yes. Yes. All right. So everybody's tuning in not to hear us talk about this, but to actually hear us talk about financial stocks, investments, how to grow incomes. What does this mean? What does that mean? Yada yada yada. You hear it. So let's talk about the rules. Brandon and I get together 5 to 10 minutes before the show and we tell each other what we're going to talk about. You hear the live back and forth, the bicker and the banter right here on the show, right live for you. That way, it's more fun that way, I think. And I think they realize that it really is live when we just start like spouting off stuff against each other. I don't know. I think the genuineness is there and people can sense it. So that's why we continue to grow. And thank you for listening. Go ahead, Brandon. Take it away as always.
All right. So, no surprise here. Another problem with Boeing. The Federal Aviation Administration has now ordered a temporary grounding and immediate inspections of the Boeing 737 MAX 9 jets. One of the planes made an emergency landing when a section of the aircraft ripped away midair. Passengers and flight attendants described the incident during the Alaska Airlines flight on 737 MAX 9 jet Friday night that left a gaping hole at 16,000 feet in the sky. This is from the Wall Street Journal, by the way. Alaska and United, two of the biggest users of these jets, canceled dozens of flights on Saturday, but said inspections were underway. The FAA said its directive would affect about 171 of the MAX 9 jets. There's only just over 200 of these in circulation currently right now. This is a bigger variant of the MAX 8, actually, that was involved, of course, in the two fatal accidents just a couple of years ago. So just something else, just another problem with Boeing. Quality control issues constantly here. We really need a leadership change at Boeing.
We need either a leadership change or we need a competitor.
Yeah, well, I mean, you've
One
got
of those two.
yeah, I mean, you've got the Airbus, which
Yeah, but I mean, it's either Airbus or Boeing right now, and we need a third.
yeah, there needs to be a third, and some activist investor needs to step up here quick and do something and demand to change a CEO, demand to change the board, and demand to change company culture, which is obviously, in my opinion, rushing things out and having serious quality control issues here that just keep popping up year after year after year after year. And this is not, this is not something to blink at. These are lives that are at stake when things like this happen.
Right. I mean, it's that, and it's the fact that I mean, Bowen's like, where else are you gonna go? Where are you gonna go? Lockheed Martin, Raytheon, they specialize in fighter jets and bombers. Bowen's like, where are you gonna go? No one else can deliver what we can deliver besides Airbus.
Yeah, but
So
your share price of your stock is suffering greatly.
yeah, I mean those guys have jobs. They have the great they're sitting in there tight, and I don't want to say they're all men. Sorry, those people have jobs and they're sitting in there tight, and they're happy where they're at, and I don't know. That's what I think is happening. I don't think that people are really worried enough about this. There's no fear of I'm going to lose my job. Because if there was, they would fix it.
Comfort is a thief.
They need to hire quality inspectors that are consistently on sites all the time, calling out things as they see it, consistent. They need to push the quality of their supply chain because
Yeah,
it's always supply chain issues with Boeing. That's what's always bringing them down.
yeah. Other airline news, there was Airbus that was in the news this week as well. Wasn't their fault. There was a plane in Japan that collided with a Coast Guard plane. 5 on board of the Coast Guard passed away, unfortunately. But the hundreds of passengers that were on the plane, and I don't know if you've gotten on YouTube and you've looked this up, but the plane was in flames as it was landing, and it was on the ground in flames. They got everybody off safe. And
Nice.
under 18 minutes, a great crew, incredible. Nothing could be said that's good enough about that crew to get those people off that plane. Because I don't know if you get online and you look at this, that crash in Japan, that was pretty harrowing.
Nice. Well, I mean, I'm glad they got everybody off. I'm glad there was nothing wrong with the Airbus plane because if Airbus starts having issues too, then I don't know where we're gonna go.
Right, right, right.
um, Yeah, I think Bowen is just mishandling this. I would not buy their stock. You and I have both called it a dog forever. Even when they had good news of the Poland contract a couple years back, we still said, this is not. I still wouldn't buy even after this huge
Yeah.
contract. So
Didn't they have to recall some of those military jets? I don't know if it was to Poland, but I think there was a recall of military jets as well associated with Boeing.
I haven't seen that headline yet, but it wouldn't surprise me.
Yeah, look at
With
it.
Poland, it was the Apache helicopter.
Yeah.
Poland has the second largest Apache helicopter fleet in the world, second to the United States, because of that latest Boeing contract.
Gotcha.
So
Coming this week, we've got earnings starting my favorite time of the quarter. JP Morgan, Chase, Bank of America, Delta Airlines, United Health Group, it's all going to report this week.
on Friday, by the way, all the same day. It's
All on
Financial Friday. Financial Friday.
Yeah, and you know what? I tell you what, out of the group there, I like United Health. Delta Airlines is still trading at a discount, I believe.
What price is it trading at?
I think it was in the mid 40s the last time I looked, but that was like sometime last week.
I'll
Look,
pull it up
hey,
while you
dude,
talk.
we're expecting now that business travel is going to return to 2019 levels, and I don't think that's priced into the stock.
Well, they did recover from the whole pandemic, and they moved up and they came back down. So they're right at where I would price them, which is $40 a share.
I
I
think that's
wouldn't
fair.
buy Delta unless it dipped below $40 a share. I price them, me personally, I price them around $40 unless there's something that I'm missing as far as news wise with them. That's where I would
I
price them.
mean, that seems to be kind of the support level there for the stock, but yeah, but you know what? I think if we have a surprise jump in business travel, if it goes above what's expected, which I honestly think it might, because I still think that everybody's, discounting business travel because of Zoom, which is what we're on right now, Teams and things like that. But I think that businesses have realized that there's no substitute for being there in person.
Yeah, they're a lot of businesses have admitted that and come out. The big corporations have said, "Hey, we see higher productivity, we see a better response when we have someone there live on the ground in person versus a quick Zoom call or a Teams meet or what have you, or a Google Meet, whatever you use." Yeah, so you get a better response, which is not good news for Zoom, but it is good news for the airlines, like you said. But yeah, Financial Friday. I'm looking forward to that because I want to see about the interest rates, how it's affected the banks. If there's going to be at the bank, any of the banks are going to talk about that. Any of the banks are going to talk about the interest rate cuts coming up, or if anybody mentions commercial real estate. That's another one I want to listen for. Is anyone going to mention commercial real estate and the issues there, or are they saying that those issues have now passed and we're good on that? Because if the big banks mention commercial real estate, that's bad news for the regional banks because there could be one or two fallouts this year due to the commercial real estate market.
I don't know, man. I don't know. I don't think there's going to be. I don't think you could say this is in the past. We're still maestroing interest rates now. Now that banks are starting to get used to the high interest rates again, we're going to lower them. So we'll see what kind of effect that has on it. Analysts are expecting a great year this year. We'll see if they're right. They're hardly ever on target, but they're expecting earnings. Profits among companies in the S&P 500 they say will climb to about 12% this year. So that's a pretty sharp growth there for an average earnings increase for the S&P 500. Go ahead, Dave.
I just want to point out that on the last podcast last week, I mentioned that however January goes, that's 90, was it 85 or 94? I can't remember. It was a high number. It was
Yeah,
at least 85% of the time. That's how the year is going to go. So right now in January, the markets are down.
yeah.
So it's not looking good. They got 3 more weeks in the month, but it's not looking good for those analysts that are saying we're going to have a rosy year. It's not going to be a dovish year.
We're due for a correction for sure.
Well, I mean, you have like usually what 1 to 2 corrections every year.
Yeah,
And I like them because they are buying opportunities for those great companies that are just being brought down from the broader market. Those are the ones that are on my watch list that I'm waiting for the right opportunities. And when you get a 10% correction in the market, that's the opportunity to say, hey, back up the trucks, let's load up the cash, buy in.
yeah. The highest sector for earnings, year-over-year earnings growth, according to analysts, will be the communications sector. Um, they're saying about 42%.
I was going to think semiconductors, maybe Microsoft, AI, year over year growth. Come on now.
FactSet says that Meta platforms will likely be the biggest contributor to the communications sector's year-over-year earnings growth.
So we're putting Meta in communications. Okay.
Yeah, that's what they're saying.
All right.
They forecast that the energy segment will experience the biggest profit decline. I don't know if they're going to be right about this. Listen, gas prices are down, but that's just for the beginning of this year. They'll still probably be down year over year for summer, but I mean, a lot of these gas companies, these oil companies have become a lot more efficient.
Yeah,
So,
I covered this in one of our podcasts.
yeah,
How the companies, because the government was refusing to give them more leases, they had to become innovative, and they found a more efficient way of drilling and pumping,
yeah,
and they're able to pump out faster for with the fewer drills. I mean, the
yeah.
fewer
So,
sites.
so gas prices, fuel prices, everything like that, of course, down year over year. It wouldn't surprise me if they still experienced a bit of a profit growth, though, just from being more efficient.
I tell you what, I will call that
Nothing will happen.
as a win last year. I called rig on the way up, then I called rig on the way down. I was a little early on the call down. It took a couple months for it to actually happen, but it did happen. Um, as far as oil, what I'm looking at right now for this year, since you brought it up, oil stocks, I don't see an up or down. As far as the year as a whole right now, I don't see any reason for the movement unless the Middle East issues continue to grow, which I'm going to cover that here in a little bit later. But if the Middle East conditions, geopolitics continue to get worse, then that might cause an issue.
Yeah, you know what? You've nailed oil the entire time we've had this podcast. I've been fairly consistently wrong about it. So, I mean, I've been 2020, I was telling everybody to sell oil, which for 2020 was the correct.
I bought options.
Yeah,
That was the year that I bought like options because oil dropped down to like zero.
yeah,
And I bought options on all the major oil firms that for that November that they would be back up near close to like 3/4 of where they were. And I made a ton of money. I mean, I was making 10 times returns on my options on some of them. It was that lucrative for me.
Well, here's one that I won't be wrong on. I'm not saying to buy it now. When we get those corrections, I want everybody to have Costco on their watch list. Even better if there's a recession this year. If the soft landing thing turns out to not be true and we have a recession, that's when you need to be buying stocks. And Costco would be great if you could get it at a decent value here. Costco in December, they reported a 17% increase in earnings per share. And that was for the quarter that ended November 26th. The result, and it was better than the estimate of $30.38 per share, and better than the consensus of $3.41. So knocked it out of the park as far as earnings go. They announced a $15 per share special dividend, and that'll be payable in 5 days, January 12th. I mean, that's just proof that the company's got great financial strength, that they can do stuff like that. This is the
$15 per share
Yeah,
dividend?
yeah, and this is the
What?
fifth special dividend in 11 years.
What?
That's
That's
$6.7 billion total.
okay. All right. Look, all right. I like a decent dividend from a company, right? But I'm with Warren Buffett for the most part. I would lean towards what he has said in the past. I would rather the company take that $6 billion and invest it in the company.
Yeah, I mean, maybe, but the thing is I think that Costco is kind of in a celebratory mood, and they're just sharing the profits because I mean they knocked it out of the park. They beat their own expectations by quite a bit. And I just think that they're like, hey, we're gonna share the profit with the shareholders. And to me in this situation, not that bad of a deal.
So what's the difference between Costco doing this and Novo Nordisk throwing a concert for all the country of Denmark? What's the difference?
Okay,
What's the
uh,
difference? There is none.
we work.
My
I
point
was gonna
is
say that.
my point is there's no difference. If you're saying they're in a celebratory mood and they want to, hey, spend some money, throw some money around. Yeah, there's two different ways of doing it. Novo Nordisk had their way, Costco has their way, but both these companies basically are raking in the money right now, and
Yeah,
they
this
want to
is
go ahead
true.
and give something back.
I mean, that's true. And I agree with that. It's just that there's been so many fraudulent companies that have done the concert thing and then, tried to sell themselves to people. Like, oh, look how great we are and how flashy we are and what we can afford. And, I just, the concert I didn't care for.
I got you, but my point is the financial stability of the company, and that's why
Yeah,
Novo
that's
Nordisk
true.
did it, and that's why Costco's doing this.
Yeah.
I would rather that the companies take that money and reinvest it in the company and grow the company. Especially if you're a pharmaceutical company, you could do a lot of research and development with that kind of money. So I would, me personally, I would rather a company do that. But for Novo Nordisk, it was a drop in the bucket. For Costco, it sounds like they're not concerned at all.
No, no. CFO of Costco said during that earnings call, he's seeing improvement in inflation running about 0 to 1% for them on a year-over-year basis. That's not bad. And you know what? You're combining that with some deflation for them on bulky items, such as lower freight costs. So I think as long as there's a soft landing, the picture for big box retail is starting to get rosier.
Hmm. I think the picture for Costco is starting to get rosier.
Well, I mean, lower freight costs, lower inflation. We've already had price increases.
All right, because
A
here,
short-term earnings burst because of the or boost because of that.
all right, yeah, all right. So let me interrupt you for a moment here. Also, the jobs numbers have come out for the year, right? Everybody's been looking over these job numbers all week. I know I have. I've been reviewing them, seeing different things. I know the amount of available jobs we have has dipped down to 8.4 million jobs.
Yeah,
So not a lot of retail investors used to look at the total amount of available jobs. I started mentioning on the show a couple years back when it was at over 11, 12 million jobs available. Now we're down to 8.4 million jobs available. And also, one thing in the jobs report, if you dig into the details there, it also mentions that there are 8.9 million working Americans that are working two jobs currently that we know of.
yeah.
So I mean, gig workers, I don't know if they fall under that because they're not quote unquote hired. They're contractors. But that's people who are actually working two jobs. So that's a big chunk of Americans that are working two jobs that account for that. So the amount of available jobs is dropping. And if it continues to drop, then that's going to be a problem. Because what usually happens in that type of environment, which you and I have both worked in this environment, we've been employed. 2008, when the employers held a strong position over the employees
Yeah.
because you couldn't find a job. They were like, "You should be lucky you have a job." I was told that at one job I was at. We're not firing anybody. Be happy. That's literally what management said at that time. So I mean, I've been in those environments, and I've been in environments when employees hold all the all the power to where there's not enough people for the job openings.
Yeah.
So I see a possibility. Now it's getting slimmer, but there's still that possibility of that downturn.
Yeah, I don't want anybody to get into, the mindset of this time that's different because we don't know yet.
We don't know yet, and we're still seeing things happen and moments happen, such as student loans. Like I mentioned before, they started up the payments. You're required to make the payments, but they haven't started collecting on them yet. So they haven't started, garnishing, defaulting, doing all those kind of things yet. And some people have already almost 3 months late on their payments coming up already because they're not making the payments. And so that's a concern. That's an issue. Like, why are we already not making the payments? That means you don't have the money. That means once they start garnishing wages or going to collections, it's going to be an issue and a problem.
Yeah.
Um, so you might see collection agencies hiring here soon. And there you go. But yeah, I mean, there's a lot that you could go into, like, why is Costco doing well? I think Costco is doing well because they're a low cost buy in bulk company, and we saw the shift from a lot of Americans making $100,000 or more shopping at Walmart. I believe Costco is also a winner in that regard.
Yeah.
People want to save money for their families. They want to go to Costco, try to save a few bucks, and buy it in bulk. You know.
Yeah, and Costco did say that they've seen a relative improvement in discretionary sales, although they didn't give a percentage to that.
Hmm.
They just said those words. There was no real numbers tied to, that. But
I would love to
good
see their
too.
next earnings report and actually get a breakdown of the numbers for 2023 and see how everything happened. They had a great year. Yes, every earnings report they reported last year was great. So I would like to see though the breakdown of the yearly numbers for Costco.
Yeah.
That is what we do. If you're listening right now, that's what Brandon and I do in our free time. We read earnings reports for fun.
Right.
We
Yeah.
are fun individuals. I'm telling you.
So exciting.
Right? Uh, all right, Brandon. What you got next, man?
That's what I got.
All right, cool. Thank you. I love it when it's my turn to take over here because that's my favorite part of the show here. I'm joking. I'm joking. Let's go in here. Let's start with the headlines because I got them lined up, ready to rock and roll here. Let's start with this one. It's on Reuters. Came out this morning at 6:27 a.m. on January 7th. The headline reads: Honda considers building a 14 billion EV production site in Canada. So the project could be one of Honda's largest investments. Moving into Canada is significant because now it builds right here in North America for an EV company trying to compete with the Tesla and other companies. That's already starting to get very saturated. The market's starting to get full
Mhm.
here. Um, they're also looking at multiple potential sites for the plant, including next to an existing automobile plant in Ontario. They want to make it a place where they can do in-house production of batteries. So that's also something that's going on. They have plans to begin the production and sales of these cars starting in 2026. The automaker is partnering with LG Energy Solutions. So LG, they used to make phones. Now apparently they're doing partnering with them on batteries and stuff. In 2022, and they announced the Ohio as the site of a planned 4.4 billion joint venture battery plant in Ohio to make batteries. But in 2023, Honda and General Motors said they were scrapping a plant to jointly develop affordable electric vehicles. 1 year after they agreed to work together in a $5 billion effort to try to beat Tesla in sales. So, they're trying to compete with Tesla. They tried to team up with GM, didn't work out. They scrapped that. Now they're going at it alone, and they're moving into Canada. Your thoughts, Brandon?
You know what? This is, yeah, it's saturated. It's a market where maybe Tesla investors may not be too happy about that. But just as somebody who sits on the sideline and watches these business wars, this is where it gets exciting. This is where the innovation comes from because of competition. And Honda has been trailing in vehicle sales and all that stuff behind Toyota, behind some of the other big guys over the past couple of years. Toyota's taken a different approach to green vehicles with more of a hybrid approach than EVs. But Ford's jumped into the EV cycle. Chevy's jumped into it. Now let's see who comes out ahead. That's what's going
Right?
to be exciting. Who's going to have the innovations that are going to be better than the others? Go ahead,
All
Brian.
right, so I like where you're going with this, right? Because this whole sector is really starting to get saturated. I mean, you have a lot of companies jumping in, moving forward, putting in billions of dollars to build these plants and everything. And who could be the most innovative and really take help the customer the best, right? Because the more innovation, they actually helps the customer. When there's more competition like this, it actually helps the customer get a better product. And the one who's being the most innovative is Tesla. This is
Yeah,
why
so
I
far.
own the stock. This is why I own the stock. They're able, because they've been at it for so long, they're able to build these EV cars.
Yeah.
I can't even say it right. These EV cars cheaper than anyone else. And thus, because of that, they're able to price it lower than anyone else. So if people want to be competitive with Tesla on pricing, they actually have to lose money in order to do it. But
Yeah.
Tesla doesn't. Tesla can remain profitable and still beat everybody else on price. And on top of it, I talked about the AV aspect, the autonomous vehicle aspect. With Tesla's a new AI being built into the AV aspect, they're able to cut the costs of autonomous vehicles by over $10,000 per vehicle, hopefully in the next 2 years to have that up and running. And this is what's really going to continue to drive the costs of producing a Tesla car down versus other cars. So Tesla's going to continue to be leading the way in costs. And this is why I'm invested in the company.
Now Volkswagen's jumped into EVs too, and they're taking an interesting approach. I'm not sure if it'll work, but their whole approach to this is like, hey, the Teslas, even those new Fords, they're all space agey. There's some people that might look at those EVs and get intimidated, not know how to work the technology, might be a little afraid of it. So now they've got these Volkswagen EVs that are coming out on the line a little bit low on the technology side. But the Volkswagen EVs, like, it's hard to tell a difference between them and the actual, like, gas run vehicles. So their approach is kind of like, hey, we know you're comfortable with the old style cars. We can do that electric as well. And if you're kind of a little bit more intimidated by the Teslas, maybe come to us.
Yeah, I mean, come on. I,
It could be
I,
it could be just a spin on it, like, hey, we don't have the kind of investment
who you're
going.
trying to get? You're trying to get buyers that are in the older age groups.
Yeah, that's
But then they're gonna age out. So then you eventually got to do the space AG tech like Tesla and Ford
yeah. And it could
and
just be,
Rivian.
it could be just an interesting spin on that. Hey, we don't have that amount of money to invest in these EVs, so we can't really do the kind of technology that Tesla and Ford, and maybe even Honda does. So let's find a way to spin this that makes it sound better for the consumer. You know, hey, we don't have the technology, but it won't intimidate you.
Right? And all right, so yeah. And I agree, but like I wouldn't buy Volkswagen based off that news, and I wouldn't buy Honda based off this news. Just because I believe that GM has a better foothold than Honda
Yeah, me
in
too.
the EV markets. I believe Rivian is getting a foothold in the US markets. The Chinese company, and it's failing off the top of my head, the big one in China right now, which is competing with Tesla and it's beating Tesla currently, has a big hold in the Asia markets. And this is where I think Honda's so far behind that they're seeing themselves lose on all these fronts here. I don't think this is going to help them. I mean, it helps them somewhat, but not enough to make me want to buy the stock.
Well, look how much of a lag Toyota had on Ford and GM in the early 20th century. in the mid 20th century, even.
Yeah,
I
and
mean,
the
in the 50s,
Toyota surpassed them. Toyota's the number one. Aren't they still the number one car company?
yeah, and in the 50s and 60s, they made cars that couldn't even go up hills. So, I mean, you stall
They've
out going up a hill in a Toyota in the 50s
well, I
or
mean, if you
60s.
got a 50-year timeline, sure, go ahead.
Yeah.
Um, all right. So here we go. Next headline. This one came out yesterday mornings. So it came out January 6th at 1:25 a.m. It was on Reuters by Lisa Bertolin. I hope I'm pronouncing that correctly. The headline reads: War, weather, put ocean shippers on notice for rough seas in 2024. So recent hostilities in the Red Sea have thrown global shippers of vital goods for a loop, but it's hardly only the issue the big carriers are facing as 2024 kicks off. Giants like Maersk, if you don't know Maersk, it's spelled Maersk. That's Maersk, says the industry, which handles 90% of the global trade, faces the possibility of significant disruptions from ongoing wars to droughts affecting key routes like the Panama Canal. Complex vessel schedules are likely to be knocked out of sync for the giant container ships, fuel tankers, and other commodity haulers throughout the year. This is so here's funny. This article, Brandon, goes into name actual companies here. It says that it's going to increase delays and raise costs for retailers like Walmart, IKEA, and Amazon, as well as food makers such as Nestle and grocers, including Lido. Um, so basically, it goes on and says this is the new normal. The waves of chaos seem to rise and fall before you get back to some level of normalcy. What is this actually going to cost? So, right, Maersk on Friday joined other major ocean carriers in rerouting ships away from the Red Sea to avoid missile and drone attacks in that area that lead to vital Asia-Europe Suez Canal shortcut. That route handles more than 10% of total ocean shipments and nearly 1/3 of the world's container trade. So tankers carrying oil and fuel supplies for Europe continue to pass through the canal. Apparently, they don't want to disrupt the oil. So that's still going. But ship owners' fuel costs are up as much as $2 million per round trip for the Suez Canal diversions, as the Asia Europe spot rate has more than doubled from 2023's average to 3,500 per 40-foot container. The increased cost could translate into higher prices for consumers, though Goldman Sachs on Friday said that the inflation shock should not be as bad as the 2022 pandemic chaos. I got more on this, but Brandon, your first initial
You know
thoughts.
what? Here's the thing. If anything, being in logistics, having a lot to do with logistics from the retail industry to where I'm at right now, if I've learned anything, there is no such thing in as far as normal goes. There's no such thing as normal in ocean shipping. I mean, I remember being at IKEA and watching and thinking like, where are my products? And oh yeah, there's a ship that's turned sideways in the Suez Canal that's blocking all of the ships, and I got my sofa sitting in the Suez Canal somewhere with absolutely no idea when they're going to show up. So there's no such thing as normal. Of course, the COVID situation made it worse for a while. There's always geopolitical issues that affect it. There's got to be a better way of doing logistics for the United States, at least. There's got to be a better way of doing it. I haven't figured it out. Maybe we figure out a way to make air travel more affordable and air shipping more affordable somehow.
You
I
know
don't
what
know.
you know what I find very interesting about this article, Brandon, was the fact that the oil tankers are having no trouble getting through there that I'm aware of. They're just attacking the other container ships.
Yeah.
Find
Wonder.
that very interesting that the I don't want to get in politics, but the countries that are or where a lot of these people are coming from that are attacking these ships and causing the issues, they're also oil rich countries, and so they're allowing the oil to go through, but nothing else.
Yeah.
Um, yeah, very 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 interesting. It makes me wonder, because I mean, there's companies that don't even travel that route that just travel the North Atlantic, such as North Atlantic Tankers, a company I've mentioned here before on this show. Um, that continue to do well, man. So NATs, it's another option. They continue to grow. They're doing fantastic job there, but they had a miss on their last quarterly earnings. But they have a lot of insider buying right now, so everybody inside the company really believes in them. A little bit more on this though. That was all about the Suez Canal, the Panama Canal. The issue with that is the water levels. So the Panama Canal are down to 33% due to lower water levels, according to supply chain software provider Project 44. Such restrictions help send dry bulk shipping costs for commodities like wheat, soybeans, iron ore, coal, fertilizer sharply higher in the last part of last year. So this gentleman here, John Carson's managing partner at Breakwave Advisors, a commodity trading advisor. His quote is, "You can always say it's a one-off event, but if the one-off events happen every other month, then they're not anymore one-off events."
Exactly.
So he agrees with you, Brandon, that in shipping and logistics right now, this seems to be not just one-off events, but the everyday survival here. Yeah, so I'm not buying any of the shippers. There's a lot of them out there. I wouldn't buy them. I would even look for them to continue to get some more downturn in their stocks because of this, the share price. The costs are going higher, and then they have to start raising costs for everybody else, but they can't. They sign contracts, right? So the costs are higher right now, but if the ship's already in the water, the contract's already signed. So these carriers are going to be losing money on some of these possibly, and that's not good for the carriers, the shipping carriers.
Not at all. Not at all.
All right, moving into the next one. I want to talk real quick about KB Home.
You know what? You might want to buy some air freight. Maybe an air freight.
Too expensive, man.
Yeah.
KB Home. Moving on. So this is more of a commentary, I believe, from me about the broader home market, home sales market. But specifically, we're going to look at KB Home's numbers. KB Home quarter Q4 earnings are likely to decline, while orders are expected to rebound. This is from Wedbush. Wedbush also expects KB Homes to rebound by 250% in Q4 this year. So we saw a drastic decline. They reported earnings to be, they expect earnings, sorry, to be $1.69 per share, compared with $2.47 per share the year prior. We knew home sales were taking a hit. We knew the real estate market was, and it was because of the higher interest rates. It cut out a lot of buyers, unless you were a cash buyer, really cut you out. Or you had to go to those 228, with the APR fluctuated, and hope that rates come down by the time you refinance. So they're looking at this, but they're looking for everything to rebound later on this year. First initial thoughts on the home market, Brandon?
Something's going on because prices should have come down quite a bit by now. I mean, interest rates have more than doubled. But home prices didn't come down. Somebody mentioned to me a few weeks ago that hedge funds own almost a fifth of the homes on the market. And I'm not sure if that's true or not, because I haven't actually looked it up. But if that's true, and if that's the reason why, home prices are higher, because they're, inflating the home prices by holding a large percentage of the homes that are on the market and keeping the sales price where they're at, that could be a reason. But it really, like, this needs more research. This is something that I'm going to make myself do over the next couple of weeks, and look in to see why home prices have not come down yet, because they should have. And that's
Right?
another reason why buyers are sitting it out, because now you've got the high interest rates that have doubled, but home prices haven't come down to make up for that.
Yeah. So the house that you could have afforded, now you can't afford, just due to interest rates. So it's pricing out a lot of people. But companies, like I said, companies who are all cash or can finance themselves, they have a much better opportunity to go in and purchase properties at this time. I just wonder what these, because I've heard the same thing, and I know a couple of realtors. I need to ask them, what are these companies doing with these? Are they just renting them out? Are they doing a rental game, or are they flipping, or what's going on with these homes that they're buying? That's what I would want to know.
I don't know. But there is something askew in the home market for sure. There almost always is because the Federal Reserve has a direct effect on the home market. And then there's politicians that always want to keep home prices high because it makes their happier, their electoral, what I'm talking, their constituents. Their constituents are happier when their home values are higher. And so there's always a political reason to affect the home market. I just don't know what it is right now.
Gotcha. Gotcha. All right. Last one is not a headline, but something I want to talk about. And it's some news I'm going to give to everybody here. So, as the Brandon and David team here at Chinchilla Pickin', I, of course, have been designated with the cryptocurrency updates and aspect along with the oil. So, cryptocurrency, some big news this week in the cryptocurrency world. I did tell you, Brandon, before the show that I'll be talking about this and the news coming out, and there's major companies involved. So what's going to happen this week is the SEC is going to rule on some spot Bitcoin ETFs, and they could win approval this week after they fixed their applications that the SEC had asked them to fix. Let me read some about this Reuters article that I have pulled up right now because it's a really informative article. It came out January 5th, written by Suzanne McGee and Hannah Lang. I like this article. It gives the best information possible, I think, given this. So issuers held discussions with the SEC officials about the S1 prospectus documents that every exchange-traded fund or ETF must submit approval. According to executives and representatives of 5 firms who declined to be identified due to confidentiality of the ongoing talks. Now, multiple issuers said Friday they expect to receive final approval of the S1 filings by late Tuesday or Wednesday. The SEC asked them to go ahead and fix some minor changes. Asset managers are expecting to amend their filings, disclose their fees, identities of the market makers for the ETFs. Those updates are due by 8 a.m. on Monday, so everything can become public that day. This is what we're looking at. Separately, regulators have been working with exchanges to finalize the 19B-4 filings, which spell out the rule changes to the SEC. The SEC must approve for spot Bitcoin ETFs to launch. People familiar with the filing process have said that issuers that met the end-of-year filing revision deadlines may be approved to launch on January 10th. The date when the SEC must either approve or reject the ARK 21 shares ETF, the fund that is first in line. The number one first in line, of course, is from ARK. Why else wouldn't it be? Kathy Wood has always been ahead of the game there. But she's the first one to have filed and will be first one to be approved. But lots of companies have applied for permission to launch spot Bitcoin ETFs. The SEC has consistently rejected them since 2013, but now we're moving forward. 14 firms, including BlackRock, Fidelity, WisdomTree, have submitted applications for spot Bitcoin ETFs last year and are awaiting a decision. What does this all mean, you might say? You're like, okay, Dave, okay, these companies are all coming out with ETFs. Well, if all these companies come out with ETFs at the same time that Bitcoin is having a big turn event where they start having their halving event, which I've already talked about on the show, that could send the price of Bitcoin sky high very fast. But if the SEC denies all these, it could cause a 10% drop in Bitcoin. So I don't see them denying. Everybody's hyped up about this. And with this in Dublin with the halving event, if you owned a strong Bitcoin company before, now would be a good time to hold, maybe even add to your position. Again, I want to specify, be very selective about which one of these cryptocurrency companies you invest with. A lot of them aren't backed correctly. They are underwater. They are not run correctly. There's a million of them out there. You have to do your research. Be very selective of these because there are some good ones out there. And those would be buys right now because of this. Or you could just invest in Bitcoin itself and hope for a nice return on your money, which I
that's
think,
what I was going to say.
yeah, which is probably the safer play, and you will make money this year. Mark my words, January 7th, 2024, you will make money this year if you just invested in Bitcoin right now.
The options on Coinbase are going to be insane.
I mean, it may not move right away the way I'm thinking it will. But it's gonna move it. I mean, you have the halving event this year that happens only once every 4 years. And now you have all these ETFs that are going to be invested in cryptocurrency, specifically Bitcoins. So you're going to see a huge jump in Bitcoin this year. I see why everybody was been calling for it. I didn't really see why until now, and it all comes together, right?
Right.
So everybody's calling for Bitcoin to have a great year. I think it'll have a good year. I don't know if it will be a great year. It will have a good year though. I am invested personally in Bitcoin, just for full disclosure, but straight Bitcoin. Um, no companies per se. I have traded Coinbase in the past. I've traded Riot in the past. I've traded all these other companies in the past, but currently I don't own them. I just own Bitcoin. Thoughts? Anything?
I'm just kind of wrapping my brain around everything you just said. I think the options market for Riot and Coinbase are going to be wild. I think people need to be careful. If you want to speculate, you want to take some money and go to the casino, then fine.
If you're going to go to casino, you might as well play the binary options on crypto.com. I mean, you have just as much luck of getting that right as you do anything else. Seriously, yeah, I still go back to that thing. You have a better chance of just gambling at a casino than you do of day trading correctly as a new beginner.
Yeah, that's true.
It's yeah, it's incredibly hard to do that. All right, Brandon, final thoughts. Take it away.
You know what? I don't if you could put together some sort of options combination to make it work as far as the crypto thing goes, to where you get paid whether it goes down or whether it goes up. You'd lose money if it stayed the same way. If it stayed the same price, then maybe work that out a little bit. But I'm not doing it. That's not my thing anymore. I've stepped away from that. I'm an investor. I buy and hold. So it is what it is. But I think this year is going to be a very interesting year just to see whether or not this is really a soft landing or if we do have a recession. Um, I don't want to be in the camp that I'm saying, this time it's different, because that camp has always, always been wrong. But right now, the news seems okay. So we'll see where we go from here. I think regardless, no matter what you think is going to happen, if you see a stock that's a good value, you buy it. And then, it becomes a better value during a recession or during a correction and you buy more. That's my thought.
Right. All right. My final thoughts is this.
It's literally almost always my final thought. I feel like I need to come up with something a little bit more, but it's true.
Yeah, my final thought is this. 2024 is a great year to look at your investments and see how you're invested, right? There's a lot of opportunities out there, a lot of good companies to invest in. If you're looking to trade, that's very hard to do. I'll be willing to work with you and meet with you one-on-one. Just DM us, let us know. I'll look that up. Don't go on the site and do that. Send that email that goes to Brandon's email and he never checks it. So don't do that. But go ahead and DM us on Instagram or StockTwits, and that'll be the best way to get a hold of us. I'm going to fix the email issue. I just found that out this weekend, Brandon, by the way.
Hey, if there's
I'm,
any,
I'm not. I'm
if
not
there's any,
IT, okay? I'm our
yeah,
IT
yeah.
department, and I'm horrible at it.
Well, if there's any hackers that can send me a message and let me know what my password is, that would be great.
Right? So I'll get it fixed. I'm gonna work on it. I'm not the smartest guy when it comes to IT, but I'll get it fixed somehow, some way. Hopefully by next week's podcast. But reach out to us. We'll be happy to work with you and walk you through some investment ideas. We know lots of different ways. There's a million ways to make a buck. I can tell you all about land forfeit sales, foreclosure sales, real estate, all these, title contracts, yada, yada, yada. I have all that information in my head. I've gone to all those meetings. I've spent the money to get all those books. I know all the information. I could give it to you for free. I'm not going to sell you anything. I'm not in the business of trying to sell you all this stuff. I'm trying to help people. That's what I'm in the business of doing. So reach out. Let us know if you want us to come talk. We can make the show a little bit more entertaining live. If you want us to come to your college or your company and put on a show, we'll be happy to do that as well. So, but reach out. I'm looking at Bitcoin to have a great year this week. Financials Fridays is going to be a big one. There's a lot of financials report earnings on Friday. KB Homes reports earnings on Wednesday. That's one to look at to get a good aspect of how the other home builders are going to report later on. So that's definitely one to watch there as well. The Bitcoin SEC rulings coming out either Tuesday or Wednesday. I'll be watching that, and definitely when all the other processing and filings go public on Monday morning, and to see what companies have filed what would be very interesting as well. So that's what I'm looking at. That's what's going on. Keep your eye out there.
I got one more thing for you. Real
Go
quick.
ahead.
I just kind of want to bring home what I was saying earlier. I wound up having an incredible year in the market last year. If I would have sat there and said to myself, I think there's going to be a recession, so I'm going to sit out on stocks, I would have missed out on a lot. And I thought there was going to be a recession, but I didn't sit it out. So I was happily wrong.
Right. You're invested. One of the big winners of last year was Meta for you. So you made some good moves there. I'm glad you held on.
Yeah.
All right. As always, we hope we have been entertaining, educational, and uplifting because we want everyone to make money. Have a good night.
Have a good night.